Hi guys, thanks for tuning in to another episode of Nuggets News. In today's episode, we're very lucky to have a special guest, and that's Dan from TheChartGuys. How you going, Dan?
Very good. How are you?
Good, thanks, mate. It's pretty early here, and I know it's fairly late for you, so thanks for making this work. But today we're going to have a discussion about fundamental versus technical analysis and everything that's going on in the crypto world. So hopefully you guys are going to find this pretty interesting. So to start off with, I guess an average day for me is going through all the news and seeing if anything fundamental has happened, reading CoinDesk, Cointelegraph. So what does the average morning for you look like, Dan?
Well, when I wake up in the morning, first thing, honestly, the big three is the first that I look to. And I went over this in a video I did yesterday, actually, where I'll start on the larger term time frames. I'll start with the daily chart, and then I'll zoom into the 4-hour, then the hourly, and just work my way down to smaller and smaller details to get the complete picture of what is going on. And usually it's pretty easy to just get right back in the flow because I was looking at it before bed, so it's only a certain number of hours that have gone by. And it's definitely changed where when back in the summer when things were nuts, I was literally waking up every 2 hours and making plays on positions. But now these days I am getting full sleep because it's not the same market and we don't have to worry about missing, a 20% move to the upside. So just starting with the day, looking at the charts, and then I will look in the chat room and get some information in terms of, altcoins that have seen some hype. And the other day, Litecoin getting added to the Korean exchange was a fundamental reason that the charts broke to higher highs. So I could see that Litecoin on the chart broke to that higher high where Bitcoin and Ethereum did not. So I was wondering, okay, there's a break in that correlation. There has to be a reason for that. So then I look and backtrack and see the fundamental reason for that.
Yeah, okay, great. So as you said, you're sticking mainly to the big three, and that's for a couple of reasons. And this space is in its infancy. There's those limitations, isn't there? So professional traders like yourself are sort of constrained to what coins you can trade and what coins you can short. So what exchanges do you use, and do you ever trade these little coins, or are you mainly sticking to the big three?
I have. I'm mostly on the big three with Coinbase because I am comfortable with the FDIC insurance for, larger capital. I don't want to risk an exchange just shutting down or, any just locking out U.S. customers or unknowns that I want to eliminate. Yeah. So I've had plenty of gains and opportunity with the big three, so I've been sticking with them. But I traded on Polo for a little bit, and I traded on I think I went to Bittrex, and I was on Bittrex for less than 24 hours when they sent out the announcement that the U.S. Members were no longer going to be served. So I got 10% trade there and then cashed right out. But yeah, that was me taking 10% of my capital and saying, okay, let's play some altcoins. And then less than 24 hours just getting shut down and saying, all right, I'm back to the big three. I don't want to keep playing this game. I just want to do what's been working and stick with it.
You US customers have got it pretty tough at the moment, don't you?
Yeah.
So on the charts, what are you mainly looking at? So what are your favorite things to trade? Are you putting the most weight in the RSI or the MACD or breaks of those bars on different time frames? And what are you looking at for the most exciting sort of trades?
My most successful trades, and this is coming from my stock trading days, are oversold bounces. It's just something I'm very comfortable with. I love when the sector is dumping. I love when the RSI is at rock bottom on the 4-hour and the daily chart because it's very comforting knowing that historically we are going to bounce in the near future and we're going to see significant bounces. And my top 3 biggest days in crypto are all oversold bounces. And that's just transferring that comfort with stocks and moving it right over to crypto. And if I'm looking for the opposite, where it's not oversold dumps, if I'm looking for bull breaks for entries, it's looking at previous price history in terms of resistance levels. So when Bitcoin broke 6,000 just the other day when it was on its way to its all-time high, it was very clear that once 6,000 broke, the volume that was behind that break indicated that we were very likely to see a new all-time high, which we saw, less than a half an hour after 6,000 broke.
Yeah, okay. So I think that day you're talking of was one of my best days as well when we had all that China FUD, and I was very confident knowing that it was, China was only one country. This isn't going to matter in the long-term scheme of things. So I'm very comfortable stepping in from a fundamental point of view, whereas are you sort of looking at that news at all? Like if there had been, really terrible news for crypto, and the price would keep dropping, are you still looking at the same things to step in, or are you at least waiting for that bounce to start on a shorter term time frame before stepping in for that trade?
Good question. I definitely do factor in the news because I know when it is more extreme that the RSI can get to the more extreme levels. So when it was China FUD going on, I was definitely waiting for some signal of a turnaround, a volume climax at the bottom, or our first little higher low and higher high to make me comfortable to get in, because I am aware that those news events can cause more extreme fluctuations in those indicators.
And that's probably a good segue to the next point we're talking about with these extreme moves. And everyone knows that these are the most volatile markets probably on the planet. And some of that is because of the limitations. So professional traders don't have the mechanisms to stabilize these markets. So options and futures, we're just seeing the first ones of those come out now. But the ability to short these markets and stabilize them on the way down, all these things are yet to come to this market, which is why I think it's very exciting and why I think there's going to be a lot more money flood into this space. And would you agree with that, or?
Definitely. I mean, the exchanges that we're using right now are the early adopters, or the first ones, and that they're very unlikely to be the best ones as we look, years out. So I think that these big companies, these companies that have been doing it with stocks for so long, I can't imagine that they're not developing their own platforms right now. What happened this year in 2017 is the collective market, all of us saying, take our money, we want to trade cryptocurrencies. So all these big companies are now going to respond to that. So they're going to be putting out more developed trading platforms. Right now, GDAX, the fact that you cannot have a buy order or a stop loss order and a sell limit order at the same time is very limiting. I have to either choose to protect my trade or to have a profit target. I can't do both at the same time. So there's a lot of space in terms of growth to get on the same level of versatility and usability. And like you said, big money will come in once it is more comfortable and once we're getting the things that we're used to having in the stock market.
Yeah, okay, yeah, absolutely. So the next thing I want to talk about is your style of trading is sort of hopping in and out of the market. I'm sure that gets you a good night's sleep as well, whereas my style is very much investing in these fundamental coins that I believe are going to perform long term and holding. So maybe last year you were saying you might have missed out on a little bit, but you still had a phenomenal year, and I've still had a phenomenal year investing early in these quality coins. So two very different approaches. I think we're talking about our returns year to date. We've both had very similar phenomenal returns. So do you want to talk about how you're jumping in and out of the market?
Like you said, it definitely, comfortability and being able to sleep is a big factor behind that. Where when I was newer in this space, I started trading cryptocurrencies about, one to 2 weeks into my research, where I was just becoming aware. I mean, I knew what Bitcoin was, but in terms of the whole world of cryptocurrencies, I was new. So as far as I was concerned, this could all come crashing down tomorrow. So I wanted to be cash as much as possible. So if it does come crashing down, I'm protected. And now the further we go on and the more I see, every time Bitcoin hits a new all-time high, it's less likely that we're in a bubble, in my opinion, because we're establishing support on the way up. So I'm getting more and more comfortable where I am able to do some swing trades a little bit more. But just my style is, it's just, if that profit's there, just give me my money. I want that cash right now. And there's always another opportunity somewhere else. So the other day, 2 days ago, when Bitcoin was breaking the new all-time high and we had Ethereum and Litecoin all breaking out, I traded all three that day, just jumping from one to the next, and ended up slightly better had I just stayed in. I started my position in Ethereum. I sold Ethereum, went to Litecoin, sold Litecoin, went to Bitcoin. So I ended up slightly on top had I just stayed in Ethereum. But it's just, a lot of it is to do with comfortability, and a lot of it's to do with the fact that I'm sitting here staring at the computer screen all the time with my other work, with stocks, with the chart guys. So it's almost like if I want to swing trade, I have to step away from the computer to not micromanage my trades.
I think that's a good point as well, that what you guys are doing and where you're trying to get people to is that point of the crypto hype is going to die down at some point, whether that's a year away or 3 years away. we want to be able to step in and trade other things. And your style of trading that you're trying to teach, the stock market's only open 6 or 7 hours a day, depending on what country you're in, and that requires you to step in and out with the same techniques that you're teaching at the moment. So that's where you want to get people to. Finally, do you want to just have a talk about where you see Bitcoin at the moment, and I'll maybe talk about where I see Bitcoin at the moment from a chart-wise, from a fundamental point of view?
Sure, let me pull up the chart real quick. I have it offhand, but it's really strong. The fact that we continue to set daily higher lows. There was a risky, I put out a video that had a thumbnail potential dump recently, and that's if 5,700 were to break, the chart would have been in a little bit more trouble, but we held 5,700 by like $10 3 times, and I'm referring to the Coinbase chart, but it held it, and then we broke to the new all-time high. So we've been establishing higher lows, and every time we consolidate and form that higher low and then see a new all-time high, it builds strength. So our most recent higher low is 5,700 right now on the daily, and as long as that level holds, the bulls have absolutely nothing to worry about. So I have some friends that are in some longer-term swing positions, and I'm almost updating them every few days saying, okay, there's a new higher low, we can move our stop losses up, and if this level were to break, then the daily higher low pattern is no longer intact, and that would indicate to me that some more significant consolidation is coming, but that hasn't happened yet. So as long as the party keeps going, the bulls keep running.
So I've just got the 4-hour chart up on my screen now, and it's very clear that stair-step pattern higher. So you're looking at that last higher low at 5,700, and we're just sort of forming another one now right up around about 60.75 there as well. So that's what you're looking at each time to be confident. That head and shoulders pattern hasn't played out, which I know a lot of people were looking at. And again, we've got a bit of we've banged our head up there on the 4-hour chart at around 61.70 now. So I'm looking at whether or not I'm a bit cautious at the moment with all the hard fork news that's about 2 weeks away. So it's going to be very different to that last hard fork where everyone got some more free money. And I'm sort of expecting a bit of a pullback over the next 2 weeks. So I'm looking for a top to be formed on different time frames. And I'm looking to get back in the market. I'm really hoping that there is a big panic, there's a big sell-off, and then I'll be looking to step in and buy again. So 2 different approaches, mate. This has been fantastic. I hope that our viewers have enjoyed this, and maybe we'll talk again in the future about some different topics. But thanks for tuning in, Dan.
Absolutely. Thanks for having me.
Cheers, mate. Bye.